What's up, YouTube fam? Welcome back to the channel. In this episode, we're going to cover the biggest mistakes option sellers make. So I'm just going to do it based on everything I've learned, right? Based on everything I've done over the last 3 months, 2 months since we started this channel and challenge. First off, I want to say I hope you've been enjoying it, right? If you've been with me from the beginning, I just want to say thank you so much from the bottom of my heart. But let's get into the video. So the first mistake I would say an option seller would make would be, obviously in this case, you see my account size is showing 18.9 or 26.7 in terms of the individual cash, right? The first mistake, very simple, right, is just oversizing. Obviously this Connell position, you can do the math. 4 times 50 is 20,000. Then you can do the math on this one. 1,600 times 4 is 6,400, right? So just two positions that are just oversized and over risked, right? Obviously, both of these stocks are risky stocks. One of them being a 2x leverage on Coinbase, and the other one being a quantum computing stock, which ultimately didn't hold much value. So the second mistake that option sellers could make is not properly vetting their stocks. So with the 2x leverage funds, the problem is the decay, right? The decay does add up over a long period of time. Now, the solution to that is the fact that you can roll. But with that being said, even with the decay, in a lot of ways, I'd still prefer a 2x leverage than a stock like RGTI. Looking back at it, right, I'd rather be in a 2x version of NVIDIA like NVDL, right, as opposed to RGTI, which, can legitimately go to zero and no one would really even blink an eye. At least if you're trading a 2x leverage stock or 2x leverage fund on a stock that's, basically going to be here to stay, and it's going to be here to stay, it should at the very least either recover or bounce enough to get out on a roll. In the case of RGTI, right now we're not sitting too pretty on this position. I'm not mad about the position sizing with this one, just because the plan was to go 5 to 7K per position with this account size. I'm more annoyed at, I guess you can say, the stock selection. I think I didn't do the greatest job in the world in terms of vetting this position, and I do take the blame for that, and I do apologize if anyone did take the signal because of me. As always, these aren't signals that you should be taking. This is just, my journey. So if you are going to take plays that you see me take, don't take it because I'm taking it, right? I'll put it very plain and simple. Just because I'm taking the play does not by any means mean you should be doing anything I'm doing. You should be doing your own research, your own diligence. So option mistake number 2 is really just not vetting it properly, right? RGTI was so speculative, and I did get a little blinded by the premiums. I thought that my strike at 16 seemed safe. Obviously, you could not account for, a 40% drop in the entire market, right? Obviously, IonQ and other stocks in this industry have fallen. Pretty much every speculative stock has dumped, and that's what happens when the market falls, right? Obviously, the Qs have fallen. I'm looking at TQQ, but obviously, if you look at the Qs, you'll see those have fallen as well. And when the market is falling, it's always the speculation that goes first, right? It's always the small caps, in any industry, right? Whether it's crypto, whether it's stocks, whether it's quantum computing, financing, anytime something like this happens, it's very natural that the smallest caps and the most speculative stocks get crushed, right? Because think about it, if it's a time of uncertainty, people don't even believe in a stock like Tesla. They don't even believe in these trillion-dollar companies that have proven to be, staples in the market. People still lose hope in that. So, just take a second to think about any company that's speculative, right? That doesn't even have profits, where you can't even fully explain what they do. And truthfully, those aren't stocks you should be selling options on. So I want to just say, I didn't make the greatest example. Even if this account does completely recover from both of these positions, I really want everyone watching this to truthfully just learn from my mistakes, because these were mistakes. So even if it works out, even if the account gets to 26.7 back to its highs from these positions, right? I'm not saying, oh, if I close this and then take months to, recover. Like, obviously, RGTI, listen, obviously, either of these, they're both expiring next Friday. And the reality is neither of them are going to expire out of the money. I mean, it's basically guaranteed that both of these at this point will expire in the money. This, honestly, if crypto does recover next week, then this could get there because of the fact that it's so volatile. But at this point, I'm not really counting on either of them to expire in the money. So I still haven't fully decided. I know a lot of people have said I shouldn't roll specifically the RGTI position, but you know, I can't just listen to everything everyone says, right? I have to make my own decisions because there's always comments, there's tons of people saying tons of different things. And if I'm going to post publicly, I can't have rabbit ears, right? That's the moral, is you can't have rabbit ears and make it in this business. So, you can't listen to everything you read on Twitter, everything you see online. Every little person is going to have a comment, right? They say opinions are like buttholes, right? Everyone's got one. So, there was someone in my Discord telling me to get out of the RGTI. And yes, obviously, if I listened at the time, my position was break even. Obviously, if I listened, I would have saved myself some trouble. But again, I just can't listen to what anyone says. So again, with that being said, the whole market fell. And ultimately, as you just saw the message, someone saying PLTR had its worst week ever. I'll pull that up right now. Every stock has gotten crushed, right? We can pull up the entire market at this point. Amazon down, everything's down. Listen, everything's down. So in terms of what happened, in terms of what I could have done better, in terms of mistakes I could have made, right? Or sorry, mistakes I did make. The reality is I was too heavily into small caps and leveraged indexes, right? So that's ultimately the biggest mistake, because when it comes to selling options, the stock you select is the single most important fact. Because if you're selling puts on something that's always going to recover, right? And let's be real, if you're selling puts on any individual stock, there is going to be inherent risk. Like we could look at all of these names and you can see there's just, you can pick any name on this chart, right? PayPal is a great example. And you'll see how far down it is, right? Now, when you think of PayPal, you think of a strong company. When you pull up their financials, let's see, you see growing revenue. So it's like, how can you possibly anticipate that it would get from 300 in 2021 down to $80? Now, will it possibly recover back to 300? Yeah, maybe in the future. But how many years is that going to take, right? 5, 10 years from 2021? I mean, we're already in 2025. So by the time it gets back to all-time highs, it literally might be 2031. And yeah, you have stocks like Reddit that have been rising. But who's to say it won't come back and cover this gap, right? We all know that gaps do love to fill. You could look at Snapchat. You could look at SMCI. The point is, there's really no individual name that you can technically deem safe. And with that being said, you start to realize that either one, you have to diversify your portfolio, which is what I began doing. This Con-L position definitely made me realize that, and I don't want to sound like I'm coming from a place of ignorance, like, oh, you didn't know diversification. With option selling, I wanted to approach it from a different strategy, and I wanted to just take it and learn it as, doing it my way, basically, right? I wanted to just figure things out as I went. Obviously, I've been trading. I've been in the markets for years now, 3.5, 4 years. I still have tons of money invested in other portfolios. But, with this is still a very much a learning experience for me. It's still, I'm learning as I go. I literally started option selling the day I started this channel on November 6th or 7th. And ultimately, every mistake I've made has been public. Everything I've done has been, I guess you can say, for your entertainment right now. With that being said, it has made me realize, since I'm doing, this publicly and I have so many opinions thrown at me, I have to still do what I believe is best for the account. One example would be, people not wanting to talk about certain stock names, so maybe I avoided those names or whatever the case is, right? So ultimately, as someone like you who's probably not documenting it publicly and probably just trading to yourself, the biggest takeaways I want you to take from this are, yes, stock selection is the single most important, but in a lot of worlds, there's still no way to really know what a stock is going to do, because there are companies that seem to look like very safe companies that are still down 80-90% from highs. So the only real solution is, one, either stick to selling puts on indexes, right? Something like a TQQQ. The reason why I even bring up TQQ is because, obviously it's a lot cheaper than the average index. If you guys want, feel free to comment other indexes that might be cheaper. And second, if you don't want to be doing indexes, because I understand a lot of you want to be doing names just like me. You want to be chasing volatility. It's higher premiums, more fun. Maybe you get assigned and it ends up shooting up. I completely understand that. So in that case, what I'd want you to do is I'd want you to be across 4 or 5 different sectors. This way, if it does end up similar to me, where I'm in 2 stocks that are down tremendously, You don't mind rolling, you don't mind getting assigned, or ultimately just closing the position. And, you're not thinking to yourself, oh, I'm toast, because it's different sectors of the market. So if one continues to fall, ideally the other one is able to create its own path and have success, and ultimately your entire account can, grow long term. So that's really it. I'm not going to sit here and talk about strike selection, because I do feel like I've picked good strikes ultimately, right? Sticking to strikes that are below lows, as much as it is important, obviously in this case, if you look on the daily, right, we were below, but it didn't matter, right? And obviously I couldn't have predicted that Nvidia's CEO would talk about quantum computing in a negative light. And obviously I couldn't have predicted that it would have dumped 40% like this. At this point with this position, my best hope is that it does attempt to fill the gap this upcoming week, in which case these puts start to lose value and allow me to get out, without losing so much. Now, listen, $2,000 for me is really not a lot. Obviously, I can't speak on anyone who's watching's financial circumstance, and I'm not trying to, make an excuse, right? I'm not trying to justify maybe the financial ruin that this position has gone through, or maybe someone who followed it has gone through. But the point is, if you're going to be trading individual tickers, then my best advice is, again, diversifying the account, putting yourself in a position where, obviously when we take an option sell and it says max risk and it shows that amount, obviously none of us expect to lose that amount, because no one expects to lose 100%. But put yourself in a position where, yeah, hypothetically, if you did lose 100%, it wouldn't really matter. So that's really my only advice. You either have to have that mindset or stick to the indexes. Otherwise, you're putting yourself at a real risk, because, you just never know which stock is going to implode. Even if it seems like a billion, multi-billion, even trillion-dollar company, it can still dump for years, right? Like, let's see, what is PayPal market cap? Let's see, just to prove the point, 82 billion. I mean, that's a huge company. When you look at the 5-year, down 26% in the last 5 years, up 138% since it started in 2015, which is, kind of cool. But the point is like, had you started selling options at the top, maybe you'd be still rolling. Maybe you'd be good by now. I don't really know. Ultimately, you get the point, right? There's no real way to predict which stock is going to just start imploding. Random news, a random CEO might say something. So your best bet is either diversification of the portfolio or just sticking to indexes, right? Like TQQQ, which again, maybe it's a leverage index. Maybe it's not for everyone. To me, I'd be more willing to take that risk than a lot of the risks I've been taking, right? If we stick to 2-week expirations, we could really be collecting 600 every 2 weeks on this account size, so it's like, let's just say hypothetically, we were doing, 70,000, 3,000 every 2 weeks, that's 6,000 a month. Listen, I get it. Not everyone has 70,000 to play with, but my point is you can still make good money without putting yourself at that much risk. So right now, despite everything I said, I'm not going to just close these positions. I'm still going to let them ride and see what I can do, see what they can do, right? See how they can recover and take it from there. But I hope you enjoyed this video. I hope you learned a lot from the mistakes I've made. If you've been with me on this journey, I hope you've been able to take a lot from when I've grown this account to now when I've dropped this account, right? And ultimately, the number one lesson is, in my opinion, right, when it comes to selling options, if your whole goal is just collecting premium and you're doing it on these risky stocks, you start to realize how it's really not necessarily worth it, because even though the premiums might be high on RGTI and ConL, the dump is so big that it really will wipe out a whole month, 2 months worth. So in a lot of ways, the only way you could actually get rich with these risky stocks is to get assigned and then ride it up, because collecting $200 to lose 3,000, 4,000, yes, you might win majority of the time, but when something like this does inevitably happen, it's going to be painful, where, again, sticking to an index where, you might collect, but then when it does dump, you're not as upset. It's not going to dump 50% overnight, and ultimately, you get assigned, you run the wheel strategy. It's very hard to run the wheel strategy on a stock that ultimately could go back to $2, which RGTI, very much could. So with that being said, I know I've said a lot in this video. I usually like to keep them a little bit shorter than this, but since I didn't drop a video yesterday, I wanted to get more off my chest. But I hope you guys enjoyed this video. I hope you learned a lot. Make sure to like the video. Make sure to comment your thoughts. Make sure to subscribe to see the updates and where I take this channel. And I'll see you guys in the next video.